Let's get right to it. Over a trillion won of institutional capital just slammed into the physical AI supply chain in Seoul. The conclusion is already in. We are witnessing a massive capital rotation from software, from the bit, straight into hardware, the atom. Now, if you just glanced at the KOSPI close, you'd see nothing, a flat market. This heat map, it's mostly noise. But you have to remember, the smart money wasn't playing the index today. No, they were targeting a very specific node, a hidden alpha signal that was showing extreme activation. And this is the signal, a positive 5.93% surge. Look, this wasn't some tiny upstream supplier. This was Hyundai Motor, completely decoupling from the rest of the market. This is the single data point we need to break down right now. And what's fueling that surge? This number right here. 1.24 trillion Korean won. That is a massive, high-conviction bet placed by foreign institutions. This isn't just day trading chatter. It's a strategic move into tangible, physical assets that you can actually touch. So what's really going on here? We're seeing a fundamental identity shift. The market is finally waking up and no longer pricing Hyundai as just another legacy car company. With its acquisition of Boston Dynamics, it's being re-rated. It's now seen as a robot foundry, a factory that builds physical bodies for artificial intelligence. This brings us to the core thesis for today's session. We are now in the era of the physical proxy. The value, the capital, it's all shifting to the infrastructure that lets digital intelligence, the BUT, actually do something in the physical world of atoms. Think about it like this. You can have the most brilliant AI in the world, but its value is capped. It's all theoretical until you pour that intelligence into a physical container, a robot, a smart factory, a power grid that can execute its commands and generate a real-world return on investment. So what we're witnessing is a structural valuation transfer. The explosive growth in pure software is hitting a physical wall, and all that capital needs a new home. Where's it going? It's flowing directly to the hardware companies that solve AI's real-world bottlenecks, capturing the value that software alone just can't. And where exactly is this capital targeting? It's zeroing in on two primary physical bottlenecks. First, you've got energy limits. AI data centers are incredibly power-hungry, which turns grid infrastructure companies into the new essential toll collectors. Second, labor replacement. The end game for AI is automating physical work, which makes robotics the ultimate destination for all this intelligence. Okay, time to execute the bridge protocol. We translate the Korean leading indicator into a US target vector. It's simple. The signal activation we saw in Hyundai Motor, that creates a direct, high correlation vector right to Tesla's robotics division. And the capital flowing into HG Hyundai Electric, it points straight at the grid plays like GE Vernova and Eaton. For the US session, our primary focus is Tesla. The capital logic is identical. The market's re-rating of Hyundai as a robot foundry is a leading indicator for Tesla's ambitions with Optimus. The correlation is exceptionally high, approaching 0.8. This vector is synchronized. But this entire thesis, this whole play, faces one critical trigger: the US non-farm payrolls report. This single piece of data will either validate or completely invalidate that 1.24 trillion won bet we saw in Seoul. The whole trade hinges on how the 10-year Treasury yield reacts right around that 4.25% level. So here's your execution guide. If we get a hot print, say above $120,000, yields are going to pop past 4.25%, putting pressure on tech. Your action is to rotate into industrials. A cold print below 40,000 sparks recession fears, you rotate to defensive assets. But the target, the Goldilocks number we're looking for, is between 50 and 90,000. That confirms our physical AI thesis, and the action is to buy the dip in Tesla and GE Vernova. And here are your tactical levels for the session. A break above the previous day's high in Tesla is your trigger to go long. That confirms the momentum. But keep an eye on the Nasdaq 100 at 25,120. If that level breaks to the downside, the signal from Asia was a false positive, and it's time to put on a hedge. So I'll leave you with this. The Seoul close has handed us the data and the logic vector. As we head into the US Open, the only question that really matters is this one. When the limitless potential of software slams into its absolute physical limit, who's standing there to capture all of the value?